Just to get started, why don't we do a quick round of introductions?
Hey everyone, my name is Jay. I'm a co-founder at Sei Labs, and at Sei we're building a parallelized EVM.
Hey everyone, I'm Steven. I'm co-founder and CEO at Offchain Labs. At Offchain Labs, we are the initial builders of Arbitrum, the layer 2 stack on Ethereum, and also builders of Prism. Prism is the leading consensus client for Ethereum. So Ethereum validating and staking, you're likely using the Prism software.
I'm Rushi, one of the co-founders of Movement, bringing the Move VM to Ethereum, and excited to be here today.
Hi, everyone. My name is Keone Han, co-founder CEO of Monad Labs. We're bringing Monad, the performant and parallel EVM layer 1, to production and introducing a lot of new architectures that accelerate the EVM.
All right, so now that you get to know the esteemed panel, why don't we just start with the title of today's talk, and we can just go in order for the first one. So does crypto need more blockchains? Why or why not?
Yeah, so in my opinion, we absolutely need more, at least more innovation happening for blockchains. I don't necessarily know if there needs to be 1,000 more blockchains that are raising funding that are like going to be launching in the future, but absolutely there needs to be innovation happening. And I think fundamentally it'll be along two categories. One is performance and the second is user experience. From the performance standpoint, like if you look at Web 2, it is drastically different than what you see in Web 3 right now. If you look at a company like Google, for example, Google processes around 100,000 transactions per second right now, just for Google search. There's literally no chain in production right now that is able to process anything even close to that for complex transactions. So I think from a performance standpoint, there definitely does need to be innovation to get us on par with Web 2, if not even beating Web 2. And from more of a UX standpoint, I think it's incredibly clunky to onboard on-chain right now. And there's also a lack of specialization across different types of infrastructure. So I do anticipate that in the future, there will be innovation happening to make the onboarding experience much simpler. And to also make it so that you have more specialization that's like built into the chain itself to facilitate different types of apps.
So I like to use the analogy when thinking of blockchains and block space of like TV channels. I'm sorry, it's a bit of a dated analogy at this point, but bear with me. And the idea is that like it's very, very clear that like if every TV show was on the same channel, we'd have a problem, right? There would just be like not enough time and space to keep everyone interested. There's going to be a lot going on. Not everyone's interested in whatever the serial programming at that hour is. But it's also clear that if every TV show decided to become its own channel, we'd have big problems as well. Each one would have to negotiate its own like distribution or cable deals, their own advertiser deals. Probably you'd have empty programming for parts of the day. So I think the system that we have is kind of like a self-selection system where there's like the Cartoon Network where you'll have your cartoons. There's, if you're interested in like nature, you'll have like National Geographic and etc. And like-minded programs end up clustering by themselves, like self-clustering into each other. And it's not an exact science, right? You can have a cartoon about nature that might go on one or the other, and you can have a competition. You can have a few different news channels, for example. And I think we'll see a similar thing with blockchains, right? So having one mega blockchain that's going to solve everything and be the one system for everything probably doesn't make sense, because for the similar reasons. You don't want to pay the validation costs of applications that you don't care about, your users don't care about, and you end up paying the cost of co-locating with them. But at the same time, there are applications that you will want to co-locate with. That could be liquidity if you're a DeFi app and want to really tie into others' liquidity. That could be other like-minded games to help with user discovery. So, hey, a user's playing a different game. Now they can easily find my game. And I think we'll see a very similar model. So do we need more blockchains per space? I think we need more opinionated blockchains. So rather than everyone launching a new general purpose chain, I think we're okay there. I think though we're going to see clustering around like-minded groups of applications and builders clustering around the same thing. And then the question is, they'll have a really close experience, but how do we interop between them? Because even if you like cartoons today, you still might want to flip the channel at some point and bring your money, if you will, to a DeFi chain. I think that's the experience that we have to build, and we're seeing this actually with Arbitrum Orbit. There's Arbitrum One in the ecosystem, which is the leading chain in the center of the ecosystem, and then there are about 100 plus other chains either built or in production today that are doing specific things. And I think over time we'll see consolidation in specific clusters there.
Yeah, I think me and Steven agree, so I don't have much to add there, but I think generally we don't need more general purpose blockchains per se. I say like app specific. We saw the Uniswap doing Unichain. I think Aave is doing like Aave chain, some capacity there. So eventually all the major apps, I think poly markets, I don't think it would be called polychain. That'd be probably difficult, but all like the major apps, crypto institutions, whatever, will probably launch their own customized app chain for make your own money off sequencer fees, have custom infrastructure, whatever you need to run the chain. So in that sense, there are more blockchains. There's more customized block space, but I don't think there's more like blockchain entities. There's probably not going to be 5 more blockchain ecosystems coming out just because we have the performance, we have the speed. Infrastructure, as we know, is kind of fatigued in terms of private markets and public markets. So I think we're at the point where general purpose ecosystems is kind of figured out, and now like app specific chains, institution specific chains, industry specific chains is kind of where we're headed.
I want to point out 2 things that I think indirectly are related to the original question of does crypto need more blockchains, which I think ultimately really address this question. So first of all, like at the end of the day, the benefit of crypto is that we have this interconnected environment where payments are built in, user acquisition is quote unquote easy once the user has a wallet, is already active on chain, and it's like we have this vision of crypto as the super app, like the WeChat, proverbially speaking, where everyone already has an account and payments are already built in. So that's the cool thing about crypto. One cool thing about crypto from the perspective of being an app developer who wants to launch a new app and have immediate access to many users with built-in payments and so on. So that's the benefit of being a builder in Web3, is that you have access to these users. But then the problem is that the existing environments don't scale. So it's kind of like signing up for a service, and initially the service is free and everything is great. But then once you start, hitting more requests, then all of a sudden it starts to get very, very expensive. So then we sort of run into the bad part of existing systems right now, which is a lack of scalability. So that kind of brings me to my second point, which is that ultimately for app builders, it's all about economics. It's all about the cost per transaction, cost per user, ability to go viral, and whether things can really scale. So right now, I think the issue is that we have a lot of blockchains. We have a lot of legacy systems that were built a number of years ago, but the computational density is not there right now. So what's really needed is a couple of technological unlocks, like literally turning the key to get to the point where one system can be very computationally dense and support hundreds of millions or billions of transactions per day within that one unit, and then we can start to scale horizontally.
Thank you, guys. Super helpful, and I'm glad that each one of you were able to kind of walk through, your thoughts on this. I guess the follow-up question to that, and some of you already touched on it, is what if we need more blockchains, or if we don't need more, and we just need to flex the parameters, what is the end state of the crypto ecosystem infrastructure? If there is kind of like a near-term end state, how close are we to getting there? And you can talk on, technical terms. I think, Jay, you mentioned, 100,000 TPS as an example, or 100 TPS as an example for one parameter. Cost was another parameter that you mentioned, Keone. So kind of like, how do we get there? Because we have standards in Web 2 that have been around for 10, 20 years at this point. And I'm wondering if we're just going to reach that state for blockchain infrastructure, and then any application will be able to develop on top of whatever chain they want in the future. What's the end state for infrastructure?
Right. So I think if you go to l2beat.com/scaling, and you look at the existing throughput of existing systems, I think the top L2 right now is maybe 70 TPS. So it's about 7 million transactions per day. That's usage, not capacity, but capacity actually is pretty close to that right now. So there are still significant orders of magnitude of improvement that are needed in order to support a single application that's top of the iOS App Store that has 1 million DAUs, 50 transactions per user per day would be 50 million transactions per day. But right now, 1L2 is doing 7 million. So there's still like this very urgent intense need for more block space, for more throughput, just to support one app. And I think once we resolve that tension, then it becomes a lot more natural to see the growth of decentralized apps. Then again, maybe we have multiple instances of multiple blockchains using that same technology that is just much more computationally dense.
Yeah, I think to speak about what we're doing in the Arbitrum ecosystem. So it's a mix of I think probably both of those as well. So we recently introduced something called Arbitrum Stylus, which is about a 10x order of magnitude tool to get you lower computational costs or additional computational bandwidth, if you will, the same thing. And this works by allowing you to actually write smart contracts on the Arbitrum chain in traditional programming languages like Rust and C and C++. So definitely, and that's actually a clear win, because it turns out that it's just the efficiency of this language and the WASM VM that we have that gives you this and doesn't actually add resources to validators. There are other things you can do that push up the resources of validators as well. And we can have that conversation, but those are trade-offs between scaling, scaling, decentralization, and decentralization. But at the same time, we have a second thing which works very well together, which is called chain clusters, which is the ability of basically very simple parallelization, if you will, via a very close interop between multiple chains, working together as one. If you want to use the Web 2 analogy, no Web 2 app at scale is using a single server to process anything. It's using, obviously parallelization and different servers that are working together. And, as an example of something not like that may exist in the future, if something exists today, if you look at the top 2 performant Arbitrum chains, of the 2 top Arbitrum Orbit chains. So Arbitrum Orbit is the program that allows you to launch your own blockchain, and there's about around 100 teams building this today, maybe around 70 or so that have publicly announced. But the top 2 are actually by one team. It's a game called Pirate Nation by a team called Proof of Play, a very, very good team. Amit was one of the initial founders of Farmville, so a very strong team, and they have a ton of users and a ton of transactions, and they actually have 2 chains. It's called Apex and Boss, both Arbitrum chains that work together and give the user the seamless experience as one chain. So I think, it's a problem we have to tackle from many directions. On the one hand, we have to make the underlying technology as good as it can get, and that's what we're saying when we say, hey, let's do more concentrated or capacity and actually get each instance to be as scaling as it could. And there will be different trade-offs there. I'm sure all of us on the stage have slightly different comfort points on where the trade-off should be between decentralization and scalability. But even if you're at the absolute highest point and you're willing to push this to the highest, you're still going to need a chain cluster, that's what we call it, but a strategy like that allows you to take multiple of these instances and work in parallel, in terms of the more horizontal scaling aspect to really get to that. And the trick is doing that in a way that gives you the best user experience. And from the user's perspective, it feels like one application, one chain, even if under the hood, is actually implemented in a different way.
Yeah, so I think that blockchains fundamentally end up being distribution mechanisms, kind of similar to what you would see with the App Store, where the value proposition of a blockchain is the ability that it has to help you get more users, right? And as a result of that, I think that the end game is probably long-term, there will be a small number of winners. It's going to be winner take most, and I think that's what we've seen playing out in crypto so far, and I think that's going to be continuing. And the reason that I think the ones that end up winning are going to be the ones that end up having the best distribution mechanisms to help application developers get more users and to be able to help their project succeed the most. I think what's missing right now were the 2 things that I mentioned before, tied to performance and tied to user experience. I think both of these problems will need to be solved from the technical standpoint. And then, beyond that, it's more just around the community and the kind of distribution channels that ecosystem is really able to build out.
I think we're all saying the same thing. That improve performance, improve throughput, and also have the ability to have customized block space, scale via multiple app chains, what it is, or just have really performant L1, L2, whatever you want to call it. So I think
yeah, I think this is great, and it's great to hear we're replaying kind of the trade-offs, right? The scalability trilemma, getting the throughput to Web 2 comparable, getting the user experience Web 2 comparable. I think the question then that's on my mind, and I think on the broader ecosystem's mind, is why, to what end? And to be a little bit more specific, it's what applications do you want building on your chain? Why will they choose your chain versus another chain? And maybe we can leave it at that for now.
Yeah, so I think fundamentally blockchains allow for verifiability in a trustless system. So I think anything that benefits from this verifiability makes sense to be building on chain. I think one thing that's unfortunate right now is that a lot of these things that benefit tend to be tied to finance, which is why we've seen things like stablecoins and exchanges being some of the core things that have found product market fit on chain so far. A lot of other things, it's definitely questionable how valuable it is to have these be built on chain. For example, if you're building a game, is there value in like paying money to have every single action that a user takes being written on chain? Well, that's something that the market will figure out, but right now it seems to be leaning towards the no. So I do think there's certain types of use cases that do benefit a lot. In Sei's case, for example, I think it will end up being a lot of DeFi types of use case and a lot of trading types of use cases that are able to help get a lot of the traction in more of the near term.
Everything is DeFi. Like if he's gaming, even if you do gaming, AI, whatever, it's all DeFi to some capacity. So I feel like digital finance is the ultimate end game, and there's like different applications of that. I think one thing that like Jay touched on is like verifiability, especially for AI. We've seen a huge boom with all like these AI agents launching. No one knows if it's actually like a 50-year-old in his mom's basement or actually AI agent. So that's actually where blockchains can be used, and working for a few teams on that. So yeah, I think I'm bullish.
I think we succeed when DeFi just becomes finance, right? Like I've met like a bunch of traditional people in traditional finance space today, and not one of them said to me, introduce themselves and say, "Hey, I work in centralized finance," right? That's just not what they say, and they just say, "Hey, I work in finance." And I think, that is going to be our success when we lose the adjective, and and DeFi just becomes finance and another rails for distribution for traditional financial products, and we find ways, and some of these are regulatory, and some of these are just innovation, that we find ways to really bridge this gap. And I think, even in this building today, we see so many players that are literally paving that path. I saw earlier the Franklin Templeton folks, BlackRock, Biddle, they're all here today, and I'm sure there are many, many others that are doing this, and that's something which we're really focusing on, in our ecosystem efforts as well, where Arbitrum, early on was, became, a strong point of Arbitrum. DeFi, Arbitrum is a leading DeFi chain, particularly for DeFi innovation. Mostly happens on Arbitrum, and that's fantastic. But at the end state, I think it's, we don't want to have finance for the crypto people and finance for the rest of the world. We want to say, hey, we have something really special here, and you have something really special too. And how do we find the ways that we can, merge these things together, and that we can, make traditional finance better because of the blockchain, and make what we already found, and in DeFi, and found that's works so well for so many people, to really expose that, not to the couple thousand users or a couple tens of thousands of users that might be using it today, but really to the larger world. And I think this is really true in every vertical. In gaming, which is another big one in Arbitrum, like, stop calling it on-chain gaming. It's just gaming. And what are the benefits that we have? And if those benefits are real, which I believe they are, then they'll speak to anyone building a game out there. And I think this is true really across any vertical. We have to really appeal to mainstream, and that's when our success will be evident.
So when BlackRock apes Arbitrum meme coins, we have adoption.
It's not that the case that they have to, everyone has to participate in every aspect of the network. It's more that they understand the network itself provides some core benefits around decentralization, verifiability, and others. And what can BlackRock, or what can Franklin Templeton, or what can banks get from that, and how can they tap into that technology? And the degens might find different ways to use that, but I think there will be an intersection, not a full overlap, right? But definitely a deep intersection between these different use cases. If it does provide the value, which I think all of us think that it does.
What about fragmentation, right? Like, yeah, we don't want people saying DeFi. We want people saying CeFi. We have 4 founders of different chains, different approaches. There's a ton of liquidity fragmentation in this market. We've had this continued conversation about monolithic versus modular. There's powerful bridge protocols that are relatively centralized. How do you guys think about your roles within this ecosystem, and kind of uniting the overall ecosystem and liquidity, for example, if it's all DeFi, Rushi, as you said, but also building kind of your own chain?
I mean, right now, fragmentation is somewhat a function of the existing throughput of individual systems. Like, if the system can only support 200,000 users per day, then inherently there's going to be fragmentation. I think that it's it's a big world out there. There's a lot of different business use cases for early stage entrepreneurs to pursue, and people will just end up building in different environments. But over time, I think it'll become clear where where the network effects are starting to create a Schelling point. It just naturally happens.
When you guys speak to application developers, what are they asking for from you and your teams besides grant financing?
Yeah, application developers fundamentally want to win in whichever ecosystem they build on. I think winning can be composed of multiple different things. For a lot of people, it's wherever they stand the chance to make the most money. For other folks, it's tied to where they're able to get the most users. For other folks, it's tied to where they can build the best product. I think fundamentally, like, all of these things need to be met. So that ties into the idea of being a distribution channel that I was saying before. Any ecosystem that sets itself up to be the best distribution channel is the one where developers will go to, which is why Solana is kind of a no-brainer for a lot of teams to get started on right now, because it's very accessible for developers to go to, and it's also easy for users to onboard over there. So yeah, I mean, I think long-term ecosystems that are able to build these good distribution channels will be the ones that are able to get more application developers.
Yeah, I think like at a certain point, infrastructure is going to be like a commodity where it's like you have 50 parallelized EVM and 50 alt VM and 50 billion other chains that all promise 500 million TPS per second. And then if you're an app builder, you're like, all right, what the hell? Like, what do I build on top of? It ultimately depends on like go to market, distribution. How do you help your teams get fundraised, go to market, be the best versions of themselves? And those will be the top qualifying teams. And I think Solana's done the best job of that, like Jay touched on.
Why do teams stay? I know that's there's I think 2 founders here who have live mainnets, 2 founders here who are still in testnet phase. For the 2 of you that have applications that have built on top that have come and gone or come and stayed, what's been their decision factor there?
Yeah, I think it's entirely tied to how well they're doing in that ecosystem. The teams that have come to Sei and then left, it's because they felt like they were not winning on Sei. Oftentimes it was tied to their product or because they just thought it was tied to the ecosystem. So they would leave and try to go to other ecosystems. And I mean, fundamentally, if you have a product that's not working on one ecosystem, I don't think it's going to work on another ecosystem unless there's fundamentally something about those ecosystems that they're moving to. And historically, that hasn't been the case. For the projects that have stayed, it's a combination of they're able to get users there, and also there tends to be a lot of excitement around those ecosystems. So they see that there's going to be a trajectory that's going to be beneficial for them. So it just seems like a place where they're going to be getting traction in the future too.
Yeah, I would say also there are core benefits of the ecosystem, and I'll give you a few examples, right? So probably one of the biggest DeFi apps, the most successful apps, which was on Arbitrum, really grew up on Arbitrum, was GMX. GMX is a derivatives perpetual protocol that went live just around the beginning of Arbitrum. And actually, many people don't know this. GMX was initially a project in Binance Smart Chain that didn't really find traction there, and they came to Arbitrum and they did really, really well and became one of the largest projects in the space. And it's anecdotally, people would say to us back in 2021, like, how are you going to compete with the likes of other chains back then that were at that point handing out hundreds of millions of dollars in grants and incentives? Arbitrum back then didn't have a foundation, didn't have the ability to do that, and wasn't. And one answer was, just actually giving them the support and working with them, which goes like a really, really long way, right? We don't just optimize for the announcement. Okay, hey, we paid some brand money. We got this big announcement. Great, let's move on to the next one, right? Day 1 is great, but day 2 and day 3 and day 100 are more important than that. And we think about how do we work with teams, and that strategic support is important. But actually, if you look at the fundamental technical features of the blockchain, I think that's true as well. So why are derivatives, and this, Gaines protocol is an example of a derivative protocol that came from Polygon, moved to Arbitrum, and quickly saw the vast majority of its volume in Arbitrum. Part of it is technical features. In that case, it's the fast block times, right? So Arbitrum has the fastest block times of any live chain at 250 milliseconds in the public chains. When it comes to to TradFi folks, that sounds like a lifetime. We're not measuring in picoseconds, but when it comes to blockchains, that difference in efficiency between getting Oracle updates, liquidations, et cetera, in that time frame actually matters. Arbitrage, it matters a lot. So I think some of it is the technical features, and I'll give one more example of a project that recently came from another ecosystem. Renegade Finance is a project that's using Arbitrum Stylus to build on-chain dark pools, and they're doing a ton of zero-knowledge proofs. They couldn't do that in another ecosystem because the tech didn't support it. Arbitrum Stylus allows you to bring in a C or a C++ or a Rust verifier that's just 10x more efficient than other ecosystems. So I think some of it is the community, some of it is the social aspect, but some of it is just the raw tech and the features that Everyone talks about the same thing, but if you actually look at the details and you're actually a builder, they're don't need to just read the marketing material, but actually need to go and look and say, hey, what works? And they, often in our case, they found, Arbitrum is unique among many because it actually, supports the things it says it does, and those technical features work and work quite well.
For the L2 founders here, there's two L1s standalone, two L2s. You're building on top of Ethereum. There's been a lot of Ethereum FUD recently. A lot of Solana maxis kind of running victory laps on Twitter. I guess why is Ethereum not dead? What is it that you get from continuing to settle to Ethereum that you couldn't otherwise get as a standalone L1?
So yeah, I'm happy to.
And then if you're building an L1, I guess you could maybe take the opposite side of that and
sure
have enough time for that last question.
Yeah, Ethereum. People say like, yeah, what would happen if Arbitrum leaves Ethereum? I think the same question you could say is, let's say Uber decided to leave the internet, right? So it's really successful, so it's gonna like do its own thing. It can try that, but like your car won't come if you order it. And I think it's actually the same thing with Arbitrum and Ethereum. Arbitrum is not like a marketing ploy that we're on Ethereum. Arbitrum gets its core security from Ethereum. And I believe that that's core security and core decentralization is as important as your car showing up as a feature. Now, it's a feature that's a little harder to sell because if your car doesn't show up, you know that it didn't show up. For a user today, if they're transacting on a chain that doesn't provide that security, that's like, they might not realize that until some event happens. They realize, oh, like FTX was an event that reminded the industry of security and decentralization are really important. Hopefully an event like that never happens again, but my responsibility as a founder is to make sure that users appreciate the importance of security and decentralization. And it's not like a coincidence that like Ethereum has slower block times and Arbitrum is able to have 250 millisecond block times, much more capacity. It's not like in a vacuum. It's because Ethereum is underneath, much like it's because Uber has the internet underneath it that it's able to order a car for you.
Every bull market, everyone says Ethereum is dead and has all L1s that kill Ethereum. And then 4 months later, everyone's like, oh shit, we need Ethereum because the market nuked. I think Ethereum has been around for the longest, God knows how long, has sustained uptime, is decentralized, still has an asset class, as ETH as an asset class is very well valued. Maybe it doesn't moon 50% overnight, but it's not designed to, right? It's designed to get you guys on board. And what me and Steven are doing is making it faster, more usable, so I can compete with these two guys.
Yeah, I think the bull case for like why continue building a rollup on Ethereum probably ties, from my perspective, into two things. One is it's just much easier to get liquidity, which I think is a standalone L1. That's an exceptionally difficult thing to do. If you're building a rollup or anything tied to Ethereum, it's just much easier to get that initial liquidity. And the second thing is just this ecosystem, right? Like all the vibes are there, the mind share is there, all the tooling is already built out. So it's much easier to get that initial type of user base, which you wouldn't be, especially if you're building like with an alt VM as an L1, it's just really difficult to get that initial kind of mind share.
Yeah, Monad is a new layer one, but at the same time, Monad is really an effort to help scale Ethereum and to pioneer new architectures and new technologies that we hope ultimately will find their way back to Ethereum as well. And my view is that the only way to do that is by proving these out in production and showing what's possible at scale, and showing the degree of decentralization that is possible at scale as well. So Monad is an improvement on the execution side, a completely new database, optimistic parallel execution, but it's also a big improvement on the consensus side with a new consensus mechanism that is enabling a high degree of decentralization while preserving performance. So I think at the end of the day, our whole team loves Ethereum. Like we're very excited about different scaling efforts that are going on in the Ethereum ecosystem, but Monad is a completely orthogonal scaling effort that's focused more on performance from consensus or execution. And I think at the end of the day, that allows everyone to win.
Ethereum aligned, Ethereum killer.
Last question, just a rapid fire. I know we're out of time, and thank you all so much. Okay, one word answer: company or application that would be your dream app building on top of your chain. It could be an enterprise, like an existing app, or it could be just a concept. And maybe the concept would take a little more than one word, but go for it.
Stripe.
Robinhood.
Wells Fargo.
Oh, man, I was going to say Robinhood too.
All right. Thank you guys so much. Appreciate it. Thank you to the audience for tuning in. And Ty for hosting us. Thank you.